What is going on, guys? Nick here, back with another video. On Friday, September 10th, 2021, a Northern California court handed down a ruling placing an injunction against Apple. Apple was required to stop ordering app developers to only take payments for in-app purchases through the Apple ecosystem. The services segment, which includes the App Store, is where a lot of future growth for Apple is expected to come from. This growth justified a much higher price-to-earnings ratio for Apple lately, so I thought it might be a good idea to take a look at how this ruling will impact Apple. So in this video, I'll take a look at what exactly happened in the Epic vs. Apple lawsuit, what the judge ended up deciding, and how valuations could be impacted based off of a few different scenarios that could play out. The Apple App Store and the Google Play Store are the main app stores where users of both iOS and Android systems can download apps and games moderated by Apple and Google on their own stores. When an in-app purchase is made, meaning a subscription, microtransaction, etc., Apple takes a percentage of the revenue, which is generally 30%. However, in November 2020, Apple did drop this to 15% for developers who earn less than $1 million because of pressure from the Apple vs. Epic lawsuit. Apple's contract with app developers specifically banned them from sending their users outside of the Apple ecosystem to circumvent the 30% fee that Apple was charging to the developers. Epic Games is a software and game developer. One of their really popular games, Fortnite, offers in-app purchases of V-Bucks. V-Bucks are used to purchase new skins, outfits, and the battle pass within Fortnite. Epic didn't like the 30% Apple was taking from their V-Bucks purchases, so on August 13th, 2020, Epic announced a permanent 20% price reduction for V-Bucks across all game versions. But the discounted V-Bucks were only available through Epic's new payment processor. V-Bucks purchased through the App Store and Google Play Store would still go for full price. However, a few hours later, Apple removed Fortnite from the iOS store. Apple made the following statement: "Today, Epic Games took the unfortunate step of violating the App Store guidelines that are applied equally to every developer and are designed to keep the store safe for our users." Apple went on to explain that Epic purposely violated the App Store guidelines related to in-app purchases it applied to every developer. Within an hour, Epic announced it filed a lawsuit against Apple. Epic argued that Apple maintained an anti-competitive market and an unlawful monopoly through its App Store policies. Epic wasn't looking for payment, they just wanted the court to end what Epic called Apple's dominance over key technology markets, open up space for progress and ingenuity, and ensure Apple mobile devices are open to the same competition as Apple personal computers. After a full year, the judge made a ruling. Now, I wouldn't expect it's over yet. With companies this large and with this much money to be gained, of course there's going to be appeals. The judge issued a permanent injunction in the Epic vs. Apple case, putting restrictions on Apple's App Store. Apple can no longer dictate purchases made in apps on Apple devices go through Apple payment processing through the App Store. However, this wasn't a completely clean win for Epic either. The judge ruled against all of Epic's other allegations that Apple was not in violation of antitrust law, that Apple did not have to allow Epic or anyone else to create their own stores on Apple platforms, and the judge also did not require Apple to allow Fortnite back on the App Store. And on top of that, Epic would have to pay $3.5 million for revenue it collected by circumventing their developer agreement. South Korea recently passed a law stating that Google and Apple could not limit app developers to their own payment systems. Apple denied the release of the iOS version of Fortnite in South Korea and said that it would only allow the game back on the platform if it agreed to play by the same rules as everyone else. In October 2020, Apple warned that this could cut App Store revenue, which falls under the services segment, which could materially damage its operating results. When we look at Apple's revenue and operating profits split by products and services, we can see that products make up the majority of the revenue and profits, but the services segment is the only one showing consistent positive growth. They also showed very strong profit margins within services. Apple does not specifically break out how much revenue it takes in from the App Store and the services segment. However, Apple did mention in their last annual report that services net sales increased during 2020 compared to 2019, primarily due to higher net sales from the App Store, which I just want to point out is listed first and include to me that it's probably the largest segment, and then advertising and cloud services. During the Epic vs. Apple lawsuit, Ned Barnes of Berkeley Research Group was called to testify by Epic. Barnes believed that the App Store generated $22 billion in revenue, which is roughly half of the services segment. It also estimated that profit margins are around the mid to high 70% range for the App Store. Apple disputed Barnes' claims, saying that it spends billions on research and development not counted within those profits. When I look at Barnes' claim, it seems totally reasonable that the App App Store generates half of the services segment. But this is far from the most reliable and sound source, and we don't have much concrete information to go off here other than the total services segment information. Another bit of information we learned from the Apple vs. Epic case was 70% of all App Store revenue comes from gaming apps, and that 70% is generated by less than 10% of all App Store consumers. So the majority of App Store revenue comes from just 10% of App Store users making in-app purchases playing games. So after all of that, let's take a look at Apple stock and try to figure out what it's worth going forward. I actually did a full analysis on Apple stock earlier this year, so if you're interested in seeing a more complete analysis of the whole business, I'll have a card linked at the end. Apple's revenue and net income over the last 10 years showed a slightly up and down revenue pattern, with a similar pattern also showing up in net income. These spikes are from the iPhone super cycles, peaking in 2012, 2015, 2018, and now 2021. Since there's only so many iPhones Apple is ever going to be able to sell, Apple has worked over the last few years to develop their services segment, which I showed earlier is growing very well. The services segment over the last year produced $44 billion in profit, which is roughly half of Apple's entire net income. But keep in mind that $44 billion in operating profit does not include taxes, depreciation, and interest, so it's not a perfect comparison. Looking at Apple's forecasted revenue and earnings, the current forecasts have Apple rising from the current $86 billion in net income over the last year to $98 billion by 2023. Over the past 3 years, service revenue has been growing at 20% per year, so I'll use this 20% growth to estimate service profit going forward. Now, I'll also make the assumption services profits are made up of 50% App Store profits. Again, we don't have much concrete information on how much services revenue is made up by the App Store revenue, so we do just have to take a guess here. So I see 3 possible scenarios for how customers and developers will react to developers being able to allow direct customers outside of the App Store to make a purchase. The first and most optimistic scenario is that there's no change to the services segment revenue and profits. Now, in this case, I could see a few apps making the move to their own payment platforms, but these are also expensive to build and you have to deal with the potential for security vulnerabilities, so in this scenario, not enough developers leave for Apple to see any drop off in profits. The second scenario sees about a 25% drop in App Store profits. In this case, some bigger app developers move to their own payment platforms, and since only a small amount of customers playing games make up the majority of App Store revenue, this may not take as many people as you would expect, but enough small developers stay within app payments for Apple to retain 75% of App Store profits. In this case, Apple would lose $7 billion in 2022 and $9 billion in 2023. This would result in an earnings per share loss between 43 cents to 51 cents per share in 2022 and 2023. To me, somewhere between this and the 0% profit loss is the most likely scenario to happen. Now, just so we know, let's push this further and say that the App Store gets completely demolished and a profit apocalypse. Let's say there's a mass exodus from the App Store and Apple loses 80% of their profits from developers taking payments outside of the platform. This would result in Apple losing about $23 billion in 2022 and $27 billion in 2023, dropping their earnings per share by an estimated $1.37 and $1.64. However, this would change as Apple continues to buy back its own stock and decrease the share count. Okay, so let's use these 3 scenarios to figure out how Apple's stock valuation would be impacted going forward. But before I do that, if you guys could take just 1 second to scroll down and hit the like button, it would really help me out and I would really appreciate it. So if we look at Apple's previous revenue growth, it's very up and down, but I added a moving average to the chart and I can see that Apple is roughly averaging 10% growth. The iPhone super cycles create a lot of this variation, and if we move over to net income growth, I added the same moving average and Apple seems to be growing around 15%. But to simplify this valuation, I'm only going to use one growth rate forecast, even though I typically use a high and low number. For this, I think a 12% growth rate is really fair. 12% growth comes out to a fair PE of 28 if we round up. Looking at these scenarios on a chart, I have the current share price of $148 per share drawn in orange across the chart. I have the best case scenario in blue, and we can see it forecasts Apple's share value hitting $166 by 2023. The green line, which is a little worse than what I expect, or the worst case likely scenario, has the share value maintaining flat at $151 by 2023. The App Store apocalypse, the 80% profit loss scenario, which I don't expect, would drop the share value down to $120. Now, I just want to remind you guys that my expectation is somewhere between the blue and the green line. So I still think that Apple is a great company and losing revenue from the App Store is not going to end the business. When I made my last video in February, the stock was trading trading around 136 per share, and the stock has risen since. I think the current valuation is fair, and I'm not expecting a huge drop in earnings per share as a result of the Epic vs. Apple case. But personally, I don't see as much upside for Apple right now as I've seen in the past. I do like a lot of the buzz that I've seen around the iPhone 13, and I am curious if they can break the supercycle trend and actually show revenue growth in a year after a normal supercycle year. I currently own Apple stock and I plan to hold it going forward because I do think the price is fair and it pays a healthy dividend. So right now I do rate Apple as a hold because I don't think the price is so high that you have to sell. However, it might be something to think about if you do see another opportunity for high growth open up. Now, thanks for taking the time to watch all the way through. I've been really trying to learn more about you guys who consistently come back and watch my videos so I can make you guys content that you guys want to see. So if you guys can comment any feedback, like things you'd like to see, or if you'd like me to do things differently, let me know in the comments. I'd love to hear from you. Also, if you want to see my full Apple stock analysis video from February, make sure you click the card right in the corner. And as always, thanks for watching.